Hey, what's going on, guys? Test, test. Let me know if you can hear me in the chat. What's going on, bud? Let me know if you guys can hear me. We can go ahead and get started here. Throw a one. Okay, got you. All right, cool, cool, cool. All right, let me send this out. We'll get started here in just a second. Appreciate all you guys hopping on. All right, cool, cool. So let's go ahead and get started here. So checking out gold, let's actually start on a higher time frame. So we already know we've been in a huge expansion leg structure, just seeing gold trade to the upside after that last pullback that started here around the beginning of April. Basically, we've seen that pullback, and then we got further expansion taking us right back to the upside to create a new all-time high. So currently what I'm watching for is with this pullback that we're seeing, we can see based off the H8 time frame, we currently haven't taken out any short-term lows at this point. So right now I'm still bullish based off of price action until price shows us otherwise. So in order for us to start to go bearish, what we will want to see is this bearish bullish rejection actually be closed through. So the previous day's low to be taken, and then seeing more sell side continuation. So if we do hold here, I would be expecting a smaller pullback for price to go higher unless we get a nice closure below the previous day's low here. So I'm going to mark this low off because we have a bearish bullish rejection. This gives us an order pull here as far as the level of demand for us based off of the 8 hour. If we go up here to the daily time frame, we can also see here on the daily with this open of this new week candle, or actually on Friday, we actually opened up with a nice gap here. So we got a volume imbalance below us in case price wants to dive deeper. Because what we could see is with this previous candle, or this candle closing this previous bullish candle's range, a wick down into this imbalance range, potentially into this volume imbalance, and then we see a shoot up, giving us a bullish order block for continuation. So that's one thing I'm paying attention to based off this daily time frame. And we also got this pocket of imbalance here as well that price may come into. So right now we can actually just mark it up from the volume imbalance all the way up to this wick low. So we have that daily imbalance there, H8 time frame. We have that bearish bullish rejection that gives us that order pull, and that also correlates with our 3 hour time frame where we have this bearish bullish rejection here. So this gives us another order pull correlated with that previous day's low and the H8 time frame. So if we can go down here, actually let's, because we do have an order pull within that daily buy side imbalance with this bearish bullish rejection, we can also mark that off here. So giving us 2 points of interest basically within our current range. If price dives down deeper, we got a smaller imbalance here on the 3 hour. That's that volume imbalance here that we could also include within that daily imbalance. So dropping down to the 1 hour time frame, we can see at this low, at the London's low, we got a bearish bullish rejection here. At the previous day's low as well, going sitting just below that, we have a bearish bullish rejection. If we measure this out here, because gold has been very expansive, this is over 100 pips. So that's too big of an order block for our order pool. So we want to keep dropping down on our macro or micro time frames to find the correct order block that's not too big, but still will capture prices volatility. So right now, with a candle on the 1 hour time frame being over 100 pips, I usually try to keep it on gold around under 50, around 35. If the market is very volatile and I can't even go to the 1 minute without getting like a very, very explosive candle, then I'll that'll be like the lowest I go to is the 1 minute time frame. But it's all based on volatility. So let's measure this out here. It's 83 pips. Let's drop down. 5 minute time frame. Nice bearish bullish rejection here. Okay, just under 50 pips, so 42 here. We'll mark this up as one of our points of interest at that order pool. We also check here on the M5 for this level at the previous day's low. That's just around 53. Let's try the 2 minute. Okay, just around 35 here on the 2 minute. So nice bearish bullish rejection. So this gives us our order pool levels. And then of course we got that correlation of that daily buy side imbalance here for that buy side. So if we jump back up here to the 1 hour time frame, what we can do based off our last 1 hour closure of the Asia open, we want to mark up our buy side and sell side liquidity. So that's going to be from that hour candle of Asia open. We're going to mark up the highest point, which would be this wick high. And then we'll mark up the lowest point, this wick low that we already just took in. This would be our sell side liquidity. Buy side liquidity would be at the high. So we can see we just ran that out here. So our main goal and objective is to start to watch to see how does price respond from this point. Of course, because it is Asia session, sometimes we don't see a big enough range for us to go all the way down to our order pool levels. So what we can also do is zero in on the current price action, see what we can see here on the M15. We do have small buy side imbalance here sitting just under price that we can see price have been respecting. We drop down here, definitely this low we may get seen taken as liquidity if price wants to dive deeper. So my main objective that I'm watching for is outside of our wick low that we need to see taken as liquidity, are there other points of interest within this current leg of structure that gold may be attracted to? So of course on the higher time frames that's going to be our order pools, but we may also see imbalances within that current leg of structure going basically off of the last hour or last few hours of New York session. Basically, how did New York set us up here for Asia? So we got a 15-minute buy side imbalance that also created this shift in structure, as we can see here, and then we pull back, continue to trade higher. So what I'll be watching for is to see how do we respect here. Right now we're starting to see some order consumption to the bottom side. We got this 15-minute candle closing about 2 minutes. So if we do see a nice shift here, we may already have some type of setup. And potentially what we would be looking for as far as our draw on liquidity, of course, would be first this high being the 1 hour Asia open high. Well, what we can also see here to the left is we have a sell side imbalance where price may want to come back, retest, and imbalance into. So we can mark our imbalance from this wick high down to this wick low, or just considering this is the last imbalance or this is the last retest into this imbalance range, ideally would be from this point here up to our wick high. So we could also see price want to run this as liquidity, tap into this range and looking higher here. Of course, we got this bearish order block. We have these highs kind of built up as trend line liquidity if price wants to continue to trade higher. And these are also correlated with the New York's high, London's high, and previous day's high as our targets for tonight. So I'll keep you guys updated here, and we'll see what we can catch on gold. If it does just continue to crash and end up closing in a strong bearish close below the previous day's low, then of course we may be getting that shift back to the sell side. So I'll keep you guys updated here. We'll see what we can catch tonight here on gold. Let me know if you got any questions. Oh yeah, for sure. We'll check out NQ in just a second here. I may be jumping back and forth because we already got that run here. So let me see. Yeah, what's going on, guys? Appreciate everybody hopping on. Definitely gonna be a great quarter, so I'm excited. Last week didn't see too many opportunities during Asia session, so hopefully we get some this week. So we'll see what happens here. So again, guys, if you are looking to potentially trade gold right now, I'm waiting on that draw on liquidity, basically under the open low of Asia from the 1 hour time frame at 3,224.5 on the future side. So once we get that run, if we do get that run, we can definitely look for a potential trade higher if price gives us our entry principles that we need to see. And let's see this here. All right, cool. So we got that marked out here. Hopefully you guys can see all this clearly. I can't really see that clear what you guys see on your end as far as how it's lined up here. If you guys need me to zoom in, zoom out at all, let me know. But as long as it's clean, cool. So let me pull up another chart so we can check out NQ. All right. Let me know. Can you guys see my NQ screen? Or is it still on gold? Let me know. Trying to make sure this is right in the background for you guys. Can you see NQ right now? Okay, so you can't see NQ bet. All right, so NQ higher time frame perspective. Let's actually just delete everything. Start from the top. So we can start here, just even going to the weekly in the full-time perspective. So basically on the weekly chart, we can clearly see clear downtrend, seeing sell side imbalances being created, remain open, price retest. We see in bearish continuation here as well. Let's see. Bearish continuation here as well. As we can see, price retesting, getting more sell side, so more continuation. We start to see after we ran out the lows of August 2024, we start to see a strong impulse taking us back up here. We can also see we came and ran the liquidity under April 2024 as well. So definitely taking out higher time frame levels of liquidity. Finally starting to see a bit of a bounce here on the NASDAQ. So if we drop to the daily time frame, now of course we don't have to have these on the chart. I was just, of course, marking it up, just showing the liquidity that was grabbed. But from that point, what we start to see is price take out highs here. So bullish, bearish rejections. We actually close above them. We also have sell side imbalance here to the left. That price is closed through. We have another like volume imbalance. Price is still kind of playing within kind of weird price action in this area. But we have inverted this sell side imbalance here. Got a nice closure through. Price retesting, kind of respecting, seeing further upside. So if we check out the H8 time frame, we can see a little bit more information, and we can see that price action is taking out highs here to the left, created a nice bigger buy side imbalance. So even if we want to start by highlighting this imbalance here, because we already noted the inversion. Now, of course, this is a bigger imbalance, so if it does cloud up the chart, you don't have to have it on here, but just the acknowledgement that we do have a bigger buy side imbalance that we're currently trading within. We can see price pull right back to 50% of it. Nobody's closed past it. Nice bearish bullish rejections, giving us continuation here. So if we mark up our order pools based off this bearish bullish rejection, we'll go down to that wick low because that's where the volatility stepped in to push the market higher. We also have this bearish bullish rejection here. So these both will give us order pull levels as far as demand goes. And we're marking that on that buy side because price action overall, we can see on the H8 time frame, currently is bullish. Oops, let me change this. All right, cool. So let's drop down to the 3-hour time frame. 3-hour time frame, we can see once we actually tested into that imbalance, we had a left head right shoulder form, bullish quasi that continued to send us higher, run out short-term highs here to the left, also invert sell side imbalances. Now when we got up to this point, or actually opened up the market here last night or yesterday, we can see we basically tested into this bearish order block and start to see more sell side. So what we can currently see is we have taken out a short-term low. We did create like a bearish bullish bearish here at this point, came back, retested. Now we haven't seen follow through, but price action is starting to show a little bit of resistance at this high. So definitely, if we did have an opportunity to go bullish, we'll be looking to take out this high as liquidity. The price is already showing resistance at. We got relative equal highs here as well at the previous day's high that we can also mark up. Let's go to the highest wick. So this would be good targets if price action was going to hold here on that buy side. Based off the H8 time frame, in order for me to really start to actively look for shorts, I would want to see a bearish bullish rejection formed and ran through, or potentially, what we have created here to the left. Also, another confirmation, because we did form a bigger buy side imbalance, we would want to see more of a stronger reaction or closure through that buy side imbalance here to the left, if that makes sense. All right, so if we go to the 3-hour time frame, like we mentioned, we got this bearish bullish order block. We have these here that we have marked up, so we can actually mark this low. It's also correlated with the previous day's low. Let me check the chat. How many contracts should I enter with on a 50K challenge? So I mean, it depends what you're trading. So like if you're trading gold, it is all dependent on risk. So on the challenge phase, I wouldn't recommend risking, especially if you're trading futures more than 1% on the trade. Of course, you sell with contracts, so I mean you can go like for a 50 pip stop loss, no more than $500 per trade. So if it's a 50 tick stop loss, that would be 10 contracts that you can enter on that position, and you'll be risking 500. 10 micro contracts, not minis. Keep that in mind as well. If you're going to do just trade minis, that would be one contract. Okay, yep. So I would do potentially, if you're trading gold, I would do anywhere from 5 to 10 contracts depending on that stop loss. So if the stop loss is, of course, like if you're doing 1% and you want to risk $500 and the stop loss is 50 ticks, then of course you could do 10 contracts if it, and then cut it in half if it's closer. Generally, I'm risking like 50 ticks per trade. Yep, no problem. So someone said, "Sir, please help to trade on ICT concept." Yeah, so I mean, a lot of these institutional concepts are pretty similar to ICT. I can't tell you specifically because I haven't necessarily traded exactly his concepts. They're more so institutional, so you'll kind of find them everywhere, kind of mixed in with price action that we're trading with TJFX. So yeah, most of these concepts, as far as like fair value gap, I potentially call them imbalance. These order blocks, pretty similar. Run on liquidity, draw on liquidity, refilling imbalances, things of that nature, all kind of coincide with institutional concepts. So if you want to call them SMC, you want to call it ICT. I mean, it's all the same. But there are different specifics. Let me say that before someone says like, you know, I haven't studied all of ICT, but yeah. All right, so jumping down here, as far as looking at NQ, we do have a nice order block here on the 1 hour. Now, keep in mind, I don't trade NQ like that. So as far as like its current range of how far it's ranging, or how far the candles are, how much the candles are producing as far as volatility, may differ from what I'm used to. So typically, 1 hour time frame, we can see this is what, over 91 points. I would say that would be too high. So we can drop down to M15. Generally, you'll see me even on gold. It's usually M15 to M1. And that's all based on volatility. If it's super volatile, I probably have to drop down to the M1. Because the main thing is like, especially trading this strategy, when you mark your order pool levels, you don't want it to be so big to where you can just, where you just catch anything. Like as soon as, if I had it, let's say I just wanted to mark up like a 1 hour, or let's say I just wanted to go all the way up to this wick high. So as soon as price comes down and touches this, let's say I'm already trying to actively look for entry, of course we got our entry principles that wouldn't have formed here at this level, but just something to keep in mind is like we want to make it to the smallest point possible where we can see the market start its reversal. So that's typically going to be seen on that order block created clearly from M5, maybe M1, up to M15. So just keep that in mind as you guys are starting to look up your ranges for order pools. It may vary. Now, you don't want to make it so small also to where you just end up missing the tap. But basically what you want to encapsulate with it, since it's not a specific range, is where did that market volatility start, retest, and kick in to push price higher based off the micro time frame. So it started here where we've seen that transition, retest, take off. So ideally, this would be the area that I'll be looking to, potentially get in if price was retesting. So if we drop back up 1 hour, let's look here to the left, mark up these other order pools. Let me check gold real quick. All right, so still no run on liquidity yet with gold. All right, cool. Jumping back to NQ. So we got this order block here, M5. Nice bearish bullish rejection. We can see price start that shift, retest it, continue higher. Same area here. So this also helps us minimize our stop losses as well, being able to get these tighter zones within the higher time frame order pool. So it's just condensing it down. So instead of us marking up a 3 hour whole order block and trying to find within it where price may reverse, we get in at the lowest point where the price action started that shift in structure. So that's our whole goal. If we look at the 1 hour time frame, we can see here with price that has shifted. Let's actually look. This is the high here. So technically 2 candlestick pullback. Let's see if we actually broke a high from this point. Oh, we never broke structure back to the downside. So technically, I mean, to add even more confluence, even if you want to sit on your hands, but yes, we could see even a shift, let's say underneath that previous day's low, but with this current shift, even on the H1 time frame, from our high, this would be our last 2 candlestick pullback. So technically, even on our micro, our highest time frame on our micro, we can see price pull all the way back within this range and still technically be bullish as long as we don't breach this low, push past it. Now, early measure, if H8 time frame, we do got it with this bearish bullish rejection here, we get a closure through it, closure through 50%. We can definitely take price down and more so target that as liquidity. But yeah, just something to keep in mind. So based off that Asia open on the 1 hour, we can mark up this wick low here at 18,809. And that would be our sell side liquidity. Buy side liquidity be at 18,809. our buy side liquidity will be at 18,909. So ideally, we want to see that run on liquidity, price test back into this order pool range, and then look for trades higher. If we look just within price action to the left around current structure, we can see here definitely some wick lows in this range, relative equal lows that price will want to run as liquidity. We got an imbalance range that was created and respected here on the M15. M15 is a good time frame to look at, potential POIs and targets to trade to as far as intraday. We also have the start of that imbalance or start of that shift when we pull back around that 50% point on the M15, giving us another imbalance here. So definitely places that price would, not as far as targets, price will want to run or potentially retest as a POI past our actual sell side liquidity run. So if we get that, of course, this will be the areas if we do push past the previous day's low that we can look to take prices higher. So yeah, that's technically what I got right now for NQ. We'll be looking for higher prices until price shows us otherwise here. So Trader Abe said, will you ever change from 1 to 3 risk to reward to 1 to 1 or 1 to 2 with the futures market, or do you still keep the same 1 to 3? Yeah, so if you jump back on the channel, I've been actually trading 1 to 1 mostly as far as my first initial target. So or if you're in the Discord, you'll also see that too. But yeah, that's mainly what I've just been trading here on gold. So we've been fortunate enough with gold's volatility to catch some really good moves past the 1 to 1 and continuation. So technically, or usually what I would do is once that 1 to 1 is reached, I'm usually closing around 75% of my trade, and then I'm letting the rest run overnight until New York. So a lot of times what we've been getting is those overnight runs that we've been seeing here with this volatility. And, that ends up being like a 1 to 3, 1 to 4 risk to reward once it's actually closed out. So it's pretty cool. Yeah, I mean, you might as well. It's about taking what the market gives you, and that also gives you range to risk more per trade when you have a more consistent target. So it's like if yeah, I can go to 1 to 3, but if that's going to mean more break evens or more losses because I got to hold that trade, especially with gold, sometimes it takes a while to transition as well. So it's like I rather just get mine for the day, and if I do get a nice swing position, it may not be week to week, but every other week or a couple times a month, that definitely makes up for the trades that I don't take. So yeah, for sure. It goes against what I learned from Forex. You can't swing futures. Yeah, I mean you can't swing during like New York session over into Asia, but I'll trade through Asia going into London, and I'll usually close during New York. If there's like a bigger news event, because of course with like my funded futures you can't have an open position through news, but if it's not, then I may like keep. If I have more than one contract still left by New York, I may hold it during New York. That was kind of one of my biggest trades this year. I think it was in January, and that went for like a 1 to 18 restore total. But keep in mind that's with partialing. So with the 1 to 1, it ended up being closer to like a 1 to 5.3 with the last targets. So futures is 23.5. Yeah, basically, so you can, if you, let's say you take a position anytime before New York, your position has to be closed by the end of New York session. But if you take like a position, let's say in Asia, same way, you can hold it basically through the night through New York. So someone said, did I take a trade? Nope, no trade taken. I need to see my drawn liquidity ran. So I'm waiting on 3,224.5 to get taken. Yeah, for sure. I got you, man. Just definitely reach out or ask any question. I mean, that's why we on here. Happy to help, brother. Oh, man. So Decaf said you think GC sells from here? Nope. So I'm looking for buys currently right now. So just based off the higher time frame, so far we haven't got a shift yet in order flow. So for me to go for sales, what I'll be looking for was this bearish bullish rejection. I need to see that taken out here. So a nice run of that, and then here on that daily time frame, we also have this volume imbalance here. Of course, this is going up to this wick low. So, if we get a dive into that, we could still see price pop and then continue higher. So right now, nope, I'm not convinced on that sell side just yet from the higher time frames. Did you set a limit order? Nope. So I don't set limit orders. I got a alert here at 3,224.5. I need to see this taken, and then I need to see all of our entry principles happen before I take a trade. So that's the thing. Like when you guys see me mark up like all these POIs, this is just areas of demand that I think price may go to, opposed to our run of liquidity. So first, this is the first area that we're looking at, and then I'm looking at potentially if price continues going here, potentially running out this low, testing this M15 imbalance, or actually making it down to our order pool because we may see a quick drawdown and then we see price spike up. So everything above us here, let me change the color so it's a little bit clearer for you guys. I'll change that to green. So everything in the green here is what I'm looking to target. So this is technically my drawn liquidity here. So those are my draws on liquidity. And then of course we got trend line liquidity built up here as well. So these wick highs where you can see marked up, New York's high, London's high, Asia's previous high, and the previous day's high are all areas for expansion that we'll look for as far as targets. So yeah, we'll see. I mean, what gold wants to do right now, we're kind of moving sideways, so we'll see. Sometimes it does take to like 9 or so before price action kind of picks up. So I'm typically on until 9:30. I'll look at the market until like 10:30. If I don't see anything by then, I don't take a trade. So Decaf said, blew my funded account because contracts were volatile using micros. Is the profit nice? I mean, yeah, that's all I trade is micros because typically if I'm trading like 50K account or I'm trading my personal account, I'm not finna, the main thing is like if I'm risking, let's say $250 per trade and um, it's a 50 tick stop loss. If I'm trading just the minis, I can't even take that on my, personal account to risk 250. So I don't want to, it gives me the option to be able to partial at certain levels and be able to add on to my positions as well. So yeah, I prefer trading micros over minis. Because that's the only thing, like especially transitioning from forex to futures. When you trade forex, you got all these levels that you can, you got a point 0.01 that you can start out with. If you got contracts, is already more expensive. So if you can't partial out a trade or you can't have the option to let your trade run because you gotta, make the decision. Let's say even with our trades, if we go to 1 to 1, I have to close out of that trade, at that 1 to 1 opposed to if I'm trading a micro contract, I can have multiple where I can actually partial out my 75%. So because I needed that, micros work better for me. But if I was trading, bigger accounts, I wouldn't mind, I guess, as long as I can get at least more than 1 to 2 contracts. So it just depends on like the risk size. All right, guys. So we're starting to see prices draw back a little bit. We still got a ways to go and to run on our liquidity, but we may see price actually stab down here. Oh yeah, definitely, definitely. Leaving runners, that's a total game changer. I mean, they don't always hit, of course, but when they do, they make up, a big difference in your P&L. So I learned that through just back testing, using FX replay and stuff like that, just to more so focus on position sizing opposed to so heavily strategy based. A lot of it is money management. So knowing what you should be risking per trade, how to increase risk per trade, how to decrease risk, and doing that through partialing. So yeah, definitely a game changer. Decaf said I have 3 hour supply waiting just in case GC don't want to break higher because I don't like how it never broke that high. He said 3 hour high. Are you saying up here? Oh, okay, okay, I got you. Yeah, I mean, right now it's kind of at that stage where we could go either way. We just haven't got that shift yet. So we can see we had like a volume imbalance here. We also have a run of a short-term low in a 3 hour time frame. So we could see, potentially price want to respect and continue to roll over. But until we get that, we gonna flow with, what price action is showing us. So we gotta get that confirmation. So like I said on the H8, if we, end up forming bearish, nice bearish close through here. Also, inverting more of that buy side bounce to the left, definitely be looking more so towards short. So yeah, right now just following order flow, be looking for buys, but we can also see, prices kind of struggling in this range. But we could also see prices want to run higher, take that out as liquidity, and then we draw back, run the lows, and then trade higher. Or vice versa, we run out highs, and then we start to see price action just continue down lower. Yeah, for sure. I mean, yeah, we could definitely go either way. But like I said, like if price just continues higher, let's just say takes out these highs, just continues. I usually sit on my hands as far as continuation. We do have a couple people in our chat that also take a position like this, and it's all about what you want to add to your system or to your list. It's not one right or wrong way. For me, I found more success waiting on that liquidity grab. But there are traders. Let's say you're up a little bit. You want to take a smaller trade. Price breaks out of the high, comes back, and we see our same principles as far as retesting this high, kind of using it as a level of demand, and seeing something like this, where you get a transition, a switch to trade higher. So, sometimes we do get this set up. I personally don't like taking continuations. During Asia, I need to see liquidity taken. I'll take a continuation during New York for sure, though. All right, guys. So we still got about 6 minutes left from that H1 closure here. As we can see right now, looking like we may end up closing more so like a doji candle. So we'll see if we can get that run on liquidity with that next candle open. But we are definitely trading more so in a range here at the moment. So it is still early in the week. We did get a nice drop here as far as the New York session. So even if we measure this out from high to low based off volume, over 340 pips. So, more than enough for us to capitalize on if we can see price maintain as far as getting that liquidity grab and then seeing more volatility kick in, which may happen as far as for our runners during London session. But, it just all depends here. So, we still got the fact that price action may be shifting to the downside. But until we actually get that confirmation, we want to just continue to flow here. Let's see. Yeah, so we'll just wait, guys. Nothing too much for us to do right now at this point. So decaf says silver and gold move in tandem. Yeah, silver and gold they do pretty close in unison. We do got a few people that actually look at like the SMTs and stuff like that. I don't really know how to track them specifically, but yeah, sometimes you can see confluence through them. Sometimes you actually see silver make a move first. So let's just check out silver real quick. Let's see. I'm tripping. Silver. Let's see what the futures chart looks like. He said, "Don't I be with J Money serving everybody?" What's up, man? But yeah, checking out silver futures right now. We can see it looks a lot different. Let's actually check out the higher time frame. HA definitely bullish still. 3 hour time frame. We can see it's still kind of moving sideways, but we can see on based off that 3 hour. If we look at ours, we can see we actually ran out some short term lows here. This we haven't taken out or closed below any. So sometimes, I mean, and I don't want to. I made the mistake of trying to, you know, a long time ago make influences between certain pairs and stuff like that. So I kind of got that as like a rule in the back of my head not to do. So I usually don't try to look at too many confluences across pairs because it could definitely start tripping you up. Or you saying like, oh, silver is already doing this, then gold's got to buy or what so forth and so on. So I do like to do it and look at it as far as back testing, but I definitely don't use it for any confirmation. But we can see, yeah, I mean, based off of that impulse up, we've been maintaining here this high. Let's look at the 1 hour. Let me make sure we broke structure to the left here. Yep. So we did break structure on the 1 hour time frame. So from our high point, our last two candlestick pullback would be actually here. Let's see. Yep, our last two candlestick pullback would be here. So yeah, technically we're definitely on a strong trend. We can see, price have to make its way all the way back here in order for us to start to invalidate on our H1 micro, time frame, kind of that bridge or that gap between micro to macro. So we can see this buy side imbalance on the H1 price retested multiple times and price higher. We got a run of this low, which was also Asia's low. Got a nice impulse. Haven't seen price continue higher though, but we can see with this run, and sometimes I'll do this too, like with Asia, since I look for a run of liquidity underneath that Asia open low. If I see it happen on silver and silver kind of runs I would say I can see sometimes silver has ran ahead of gold. That I'll still be expecting this to occur on gold at some point. Would be that run of liquidity since we actually did on that on the silver chart. So yeah, you can use it for confluence. But like I said, some people use like SMT, which I'm not too familiar with. I have did a little bit of back testing and stuff on that, but I don't know specifically. It's not something I utilize. But utilizing like if let's say gold is making higher highs here and we end up making like a lower low on the or on the silver chart, then we may be seeing like a reversal. So let me see if I can find one, and you guys can let me know if I'm wrong or not because I don't know about that. So let me see. This wouldn't be a good example because they both did the same thing. Um, let's see here. Higher high. Okay, like here. I believe so. Like this would be one technically, like a discrepancy. So you see how the silver we made a higher high here, and once we printed this high here, which is at that same price point, so if you guys can kind of see that align, same price point, when we came back up to retest, we actually did not breach that high. We made a higher high here on silver. We made basically a higher low point on gold. So that could definitely tell us maybe early, but like I said, I don't want to use the confluence of something that I don't technically use in my technical analysis, but I have seen people do that the same way they use like ES and NQ. So definitely something you can backtest for sure. But I am expecting that run on liquidity still. We'll see if we get it. Yeah, that's a good question. I don't know why no one trades silver. I never just was originally like attracted to trading it. I just always heard of gold, people trading gold, and I just start trading that. But I mean, I guess we can trade potentially both since they kind of mirror each other. But that is a good question. I don't know. Or I wonder, just thinking about it now that we just marked that up, because silver failed to run that higher high, um, and or excuse me, because silver did run that higher high and gold failed to do it. Are these highs going to potentially be reached? So that's a good question. Since on the silver chart in 15 we did run it. So it's all these little things, of course, that can add to your edge or something that you gotta see. But for me, I gotta do like back testing the FX replay. I gotta see it at least, over a quarter to half a year in real time to, just to mark up on the side, like on my journal, like I did see this happen or I seen that happen. For me to be like, okay, yeah, I'm gonna implement this in my strategy. But definitely, you might be onto something there with that silver. Yeah, let's go ahead. Let's check out NQ again. See what's going on. Not too much, guys. Honestly, not too much. So we didn't even breach liquidity here as well. So under that wick low at 18,809, still no run there. So we basically still trapped within the range. Let's see what we got this week. So no red folder news here. Tuesday. We got Empire State Manufacturing Index at 8:30. Okay. Wednesday we got core retail sales month over month. Got some cat news. Oh, Fed Chair Powell speaking on Wednesday. Oh, okay. Well, Fed Chair Powell speaking on Wednesday. We'll see tomorrow, but I probably won't trade tomorrow night. But we'll definitely trade on Wednesday night for sure. Let's see, Thursday. Unemployment claims, of course, and then Friday, bank holiday. This is Good Friday. Wolford CAD, German, Euro, CHF. All right. Well, yeah. I mean, it probably should be pretty slow, honestly. Shouldn't be too crazy. We'll see though, because we do got, Fed Chair Powell speaking on Wednesday. So definitely we'll see. We catch tonight. Tomorrow we'll see New York. New York will be a maybe. Definitely not tomorrow night. And then Wednesday, probably no trading New York. And then Wednesday night, Thursday night for sure. Friday, no, probably not Friday. So probably, shorter week, but we'll see. Well, DCAT said what session is around 6 a.m.? If you're talking 6 a.m. EST, that's going to be New York. Or, excuse me, 6 a.m. EST, that's going to be late London, heading into New York. So, basically pre New York. I definitely see more traders that take setups like pre New York literally around that time, like 6, 7 a.m. before New York starts. The decaf said, "What session have you made the most profit?" I mean, 2025 it's got to be Asia, but I just literally start trading Asia, like November, late October, 2024. I have been back testing it pretty much the whole well, I have been back testing it since like 2023. Not this specific setup based off the 1 hour open, but just kind of using our levels as far as our session levels, order pools, stuff like that. But once I seen this video, actually last year, Charmaine Trades talks about the Asia Open liquidity. So I literally started using that as a range of liquidity, the same way that we use our London lunch liquidity. So if you guys been on the channel, we usually use the London lunch where you guys can see. Let me turn this off for a second. Where you guys can see we have the buy side, sell side liquidity. So we can kind of use that as influence on, the liquidity to be ran as far as the trade. So if I'm looking for buys as influence with our order pools, with the level of demand, we get that run a sell side. Boom, we can get the potential position to take the market higher if we get that transition. So utilizing that same thing, I would say definitely 2025. I've made way more trade in Asia session than New York. But I am starting to see a little bit more profit from New York within the past like 2 to 3 weeks. But all time, definitely New York, because I been trading New York um, majority of my trading career, you could say. But yeah, I mean overall my approach is pretty slow, so I may only take literally 2 trades a week if I take a trade. So just something to keep in mind. I'm looking for just quality, looking to gain, a couple percent per week, and I'm good with that. Troy said, I work during New York session and typically not available to 7 to 8 p.m. CST. What market can I trade at night and what strategies are best for those markets? So 7 CST is what? That's central, right? So 8 p.m. So that's 1 hour behind EST, right? Just so I'm correct with CST. So that would be basically right now. So 8 o'clock is 7 o'clock your time right now, or 7:17. Okay, cool, cool, perfect. All right, so yeah, I mean, that's one of the main reasons we start trading or going streaming live during Asia session. You definitely want to trade Asia if this is the time that you're available. So one thing I will recommend, just to kind of start you out, if you aren't already in the Discord, and can message me or message me on IG so I can send you specific videos, but you do want to check out um, basically, if you've already been utilizing what we teach at TGFX, you'll be fine. But the main thing that I do as far as for the Asia Open, if I am trading this strategy, is I'm marking up buy side and sell side liquidity based off of the market open of Asia. So that 1 hour, I'm marking up the highest wick and the lowest wick, and I want to see that low ran as liquidity before I look for a trade. So in this case, we ran it on the gold chart. I do trade futures, so I actually want to see it ran on the future side. This is more so just specifics as far as getting that liquidity grab for me to be able to, take this trade to the upside. So that's why specifically I look at the gold futures chart. Some people do take the entry straight based off the gold chart, but a lot of times, because gold is kind of connected, with the forex market, you can see more so manipulation. I feel like futures is definitely more so accurate when imbalances are retested. They're tested to the T. When wicks are ran as liquidity, they're ran to the T. So if you guys are, like I said, if you are in the Discord, you can send me a message, j.will24, or on Instagram, Jordan Futures as well. But main thing that I want you guys to pay attention to or to look at, if you go on YouTube and type in Charmaine Trades and look up his Asia strategy, that was going to incorporate that Asia Open. So you can trade any pair. You can trade, I would say the best pairs to trade are going to definitely be your pairs with JPY, but gold definitely moves during Asia. Once that liquidity is taken, sometimes we will see price action move sideways, and then towards like 9, 10 p.m. I usually trade up to like 10:30. It'll be the latest I'll actually take a position. I may stay up till maybe 11:30 midnight to hold, and then just let that trade run with my stops moved or whatever. Um, but yeah, definitely gold. Anything with all pairs: AUD JPY, GBP JPY, USD JPY. But the main thing is, of course, following order flow. So if I'm already identified the market here as bullish, and now this is just specific to me trading gold because a lot of times we see more continuations. If your pair is prone to a lot of reversals, you may want to take both sides of liquidity. So you do need to test this out for your specific pair. But for instance, if I am bullish on gold, what I want to see is a run of sell side liquidity. So I already got my POIs marked on the higher time frame, all those things. And then if I go down to lower time frame on the 1 hour, what I want to see is liquidity taken. So my liquidity right now, based off that Asia Open, is at 3,210.88. On the future side, 3,224.5. So I want to see that taken as liquidity, and then I'll look for a trade higher. And then, of course, I got my POIs sitting under it in case price wants to run past it as potential areas I want to see price reverse from. So that's technically all I look for. You could also do more so of a continuation strategy. So let's say like even with today, price hasn't ran out the low, but let's say we run out the high and see price trade above it, come back, retest, respect, see a nice transition, and then you can look to take price higher using this previous level of supply as demand. So Very easy and simple way, waiting on that liquidity grab and then waiting on the entry principles. So CBN 55 or 555 says, Jordan, are you able to make a decent income with 2 trades per week? And yes, and if yes, what is usually your leverage? So yeah, I mean at 2 trades per week, I typically like on my funded account and on my regular account, I typically risk like $250 per trade. So if let's say that trade does result in like a 3R total, and a lot of times I do add on to the position, I may total like 1,000 on the high end. If it's just the 1-to-1 and price pretty much hits the rest break even, maybe closer to $200 per trade. So 2 good trades a week could minimum be 400. High side be closer to like 2K. But it just all depends. If it's a great week, we could do like 2K on the accounts. But yeah, booking. So yes, what's the Discord? So the Discord, that's just where we have where we have our chat. Basically, we stream live there as well. You'll have access to the course as well if you're in the Discord. I'll send a link in the chat in just a second. So Rohit Rod said gold, 5 minutes, explain PO3, power 3, nice. Rose said booking profits is problem. Why? Okay, thank you. Which company funded account? So I got a funded account with my funded futures right now. I'm not sure what you mean by booking profit is problem. Why? There's definitely nothing wrong with booking profit. And you said gold 5 minute. So what are we looking at here on the 5 minute? Let me know. Oh, okay, I got you. Said make a lot of profits with problem in booking profit, psychological problem. Yeah, I mean, I kind of was that same way. If you guys go back in the channel, even when I first originally got funded back in 2023 with the funded trader, and I got my first payout with them, I had got a 10K payout. But at that point, I was literally holding all my positions, so I was going 1 to 8, 1 to 9, like minimum. I was moving my stop loss to break even when I hit like a 1 to 3 to 1 to 5 range, and then I would just, but I wouldn't even close partials, anything. So I was like that for a long time. Of course, it reinforced itself because I did get a nice size payout with it. But what I realized over time that is not sustainable. When you're in a market that is in expansion, definitely utilize, holding on to positions. But the main thing that I do too is I just kind of measure out on the daily time frame, like what's the market producing. So in this case, we actually had caught a nice trade here last, I believe that was Tuesday. We caught a really nice sell. Yeah, we had caught that sell continuation here on Tuesday, I believe. But what I usually or typically do is measure out the previous candle. So if the previous candles are overall going over, this is 1,200 pips here from the daily high to daily low point, I know, okay, I'm in more so an expansive market. If this candles are previous day candle, not just the one, but going back within the range, what does the previous week or whatever produce? If I'm going low to high and it's struggling to, it's only 190 pips or so, I'm not planning on being in a position and holding a position for very long. So I know my aspect of how I should be taking profits, I should treat it differently. Or if I'm seeing something like this, very strong expansion here, very strong expansion to the upside, and we actually caught this here on Friday. So this was another one. We had a nice run or impulse here. But if this is going over 1,000 plus pips, this is where I want to make sure that I do get a nice position that I may want to hold on to because the market is more so expansive, so I can trust it more. But if I'm seeing, days of lower volatility just based off the range, I know I may just, have to be a little bit tighter. So, those days don't occur all the time, but I'm definitely like that too. I used to never want to book profit. I'm gonna hold it until, I can't. Yeah, no problem. Hope you guys have a good night. So yeah, guys, as far as goes, price action right now is still just moving sideways. No draw on liquidity ran just yet for our Asia Open. Now, I appreciate that, man. So Troy said, yeah, if I can learn to trade using your strategy at night, it would help me tremendously. Do you have a course explaining your strategy on how to trade the Asia Open? No, but if you let me, I'm gonna type in the chat to message me so I can send you specific videos. But yeah, I mean specifically, like I'm utilizing the same entry parameters. I'm looking at the same POIs. The only thing different, if you did check out the course, that you're not gonna see in the course is specific to Asia. Which the only thing specific is just marking up this liquidity. What you're gonna see in the course that Ray goes over is buy side and sell side liquidity, but it's gonna be based off of London session because we primarily trade New York until we started now trading Asia. So we definitely, I definitely start working on more videos like that. I got one on YouTube that you can check out where I show examples of the trades that I've been taking during Asia. I actually got two videos up, so definitely check that out. One of them is the only strategy you need in 2025. And then I think the other one is the best one-to-one strategy, but I think most of those trades were New York. So with this buy side, sell side liquidity, what we look for during New York, like we talked about, would be a run. So if I'm looking for buy side, I want to see sell side taken, then I can look for potential trade higher. So this is that same buy side, sell side liquidity, but we're doing it just from that Asia Open. So that's kind of our bracket or our range. So once that's taken, then we look for a trade higher. But everything else in the course is all going to be the same. Top 4 ways to. Oops. Yeah, I'm trying to go on there now so I can actually type in the chat because on my end I can't type here, but I'm about to see if I can type in the chat. Okay, cool. All right, guys. So I just copied a link to the free Discord for you guys. So anybody that has any more questions or needs to message me personally, just go in there and then you'll see me all in the chat or general chat is j.will24. If not, too, I can give you guys like my IG. But yeah, definitely Discord or IG is like the top two to get a hold of me. And we also run webinars and things in our Discord as well. We got a trade and chill channel where we also may trade live periodically. Typically, we do trade live in the Discord, but we've been running it on YouTube, or trying to get it going on YouTube for you guys as well. So definitely utilize the everything in the chat once you hop in there, and reach out to me if you need anything. Yep. So you may see it, Jordan Futures. I just put a link. Yep, I put that link. Yep, that's me. You guys see it, or it didn't work? Oh, okay. Hold on, I got you. It might have blocked me from posting it. Hold on, real quick, guys. All right, I'm about to post it right now. All right, you guys should see that link right now. Oh yeah, no problem. But yeah, guys, we're still ranging back and forth. I do like the fact that we are kind of building up these points here of liquidity. So let's say if we do get that run down lower and we do get that transition, this will definitely be an easy target for us, because we have these relative equal highs building up, as well as a nice imbalance that price will be drawn to fill in if we do get that run and price holds for us to take a potential position higher here. All right, guys. So we are getting a run down lower, but give me a second. I'm gonna go grab my charger real quick, grab some tea. As far as in Q, we end up running out the liquidity at this high. So what you'll see also, some traders will do is actually any side of liquidity that's taken first, you can take the opposite direction. So because we didn't run out our sell side liquidity, we ran out buy side. What you could potentially do, or what you may see some traders do, is look for this transition here. So, we can see short term run here, potential sell side imbalance. Let's say price comes back, retesting this imbalance range here. Let's say we get a dive down, price retest, and we drop lower. We may see price at least want to come down, run out that liquidity. And you know what I mean? So at least being able to take the retrace back to run, even though this may be the true move because price action is overall bullish. So we may see price spike down, run out previous day's low, come to the order pool, and then trade higher. Or we may not even see that. We may see lower, lower sales. So there's a lot of different ways you can utilize just this Asia Open to take trades. But for me, main focus is always trading with order flow with gold, and then waiting on that opposing liquidity to be taken. So I'll be right back. All right, guys. Yeah, I mean, right now we're just more so in a ranger. Like I said, usually price action picks up closer to 9. So we'll see what volatility kicks in. I usually hop off around 9. But if you guys are in the Discord, I will post when I actually enter into that position. So the link is in the chat if you guys do want to hop in the Discord. Completely free. And I do post in the general chat when I do enter a position. I post some take profit hits and extended targets. All right. So Troy said, "How long do you typically wait for this setup? Trading gold? Do you apply it on multiple different instruments?" So yeah, I only trade gold with this. Typically, it all depends. Sometimes we'll get like similar to what we can see on the forex side, left side of my screen. Sometimes we see like as soon as after 7 o'clock, or as soon as we get that 1 hour open, we get that run, and then we see a transition pretty early in the start of the session, or basically starting at 7 p.m. And then sometimes what we also see is price take a while. So I may get a position around 9:30, like up to 10 o'clock. So it's kind of verbatim, but the latest that I will wait is till 10:30. If I don't see anything by 10:30, it's fine. A lot of times what I will end up seeing happen, I have my alert set, have to run a sell site liquidity, and then it'll be like 2 in the morning, 3 in the morning. I'll get up, check my phone, and then I'll see that that level has been ran as liquidity. But I mean, at that point, I'm not looking for any position. I'm just waiting until New York to see how London set us up. But yeah, this can definitely still be utilized across multiple pairs. Looking at NQ, like we talked about, started to see price run lower, kind of retesting at that high. So I could see either two things happening here. Either price transitions, respects this high, and trades higher, or we respect at this high point on the sell side, see continuation, and then at least get that run of this liquidity down lower here. So if we look at this, it's at least 88 points, 90 points, 360 ticks total. So not bad to the downside here. But like I said, ideally, I want to trade from the low. Do you trade NQ at night? No, I don't trade NQ at night, but the guy that I was talking about or mentioning that you can look up, Charmaine Trades, this same setup for Asia, he does at night or around this time. So he utilizes NQ. For me, I just utilize the same thing and I trade gold. The differences that he kind of talks about is just running our seeing liquidity grab and then just taking continuation from opposing. Of course, you still want to have a strong bias. For me, since gold gives more continuations and the reversals are a lot less likely, especially to the buy side currently right now with the volatility on gold, I like to look for continuations with order flow. Whereas I think with him specifically, and don't quote me because I don't, know, I just kind of came across one of his videos using the Asia Open, but he looks for either side of liquidity. So the fact that we did not take out buy side, sell side, and we took out buy side, and we started to see this transition, this may be, an entry principle for him to start actively looking for a setup as long as sell side imbalances start getting respected, retested for continuation. But we did just form a bigger buy side imbalance here, so we want to see price start to close through that and maintain on that short side. But for me, if this same setup happened on gold, I wouldn't be looking for sells at this point. I'd more so be waiting for price to run out lower. If it runs in my session, I'll take price higher. But yeah, gold slowly trying to make its way down. I'll stay on another 10 minutes or so with you guys. But like I said, definitely jump into Discord. I'll be posting if I get in that trade here. But if you guys are going to be looking for a gold trade tonight, make sure you got your lows set at 3,224.5, 3,210.88 on the Forex side. And then we'll be waiting for that breach of that low, see a nice run of liquidity, and then see if price will hold up for the transition. All right, guys. So, like I said, not too much going on for us right now on gold. Just kind of moving sideways. But definitely, like I said, I'll let you guys know in the Discord if I look to take anything. Let's check out NQ again. NQ kind of ran out that high. So, similar to what we talked about, potentially using this level of supplies demand. And this is, again, why I don't really like to take like the setup of just any liquidity that's grabbed, take the trade. That's not to say that this won't sell off, because the price may just run a little bit higher and then, that same occurrence happens. Right now, we can see this was one sign that, price action wasn't ready yet, bigger buy side imbalance. Also, the fact that price retested it. We draw this out here. 50% of it, price action respecting it as well. Continue to trade higher. We get another buy side imbalance. So we may see a shift, but at this point, we're kind of trading back above that high. So if we maintain it, we may see further upside. If we get a nice bearish close through it, retest, continuation, then we may get more of that sell side follow through. So yeah, that's pretty much all I got for you guys tonight. Like I said, if you're in the Discord, keep your eyes peeled because we are getting close to running out liquidity, but right now, that volatility just isn't there yet. So typically we see that usually around gold 9:30 come to 10, sometimes 9. So as 9 o'clock hits, we'll see that spike. But I don't want to hold you guys here too long on the stream. But definitely, we went over a lot of good information. If you guys are interested too, we also have a trade copier in our Discord. So all the trades that you guys will see me take on these live sessions also are linked to my own personal trades where we have members in our chat that's utilizing it as a trade copier service. So, the based off a percentage of their account, whatever is risked on the trade will also be risked on their account. So kind of a hands-free option if you guys aren't able to take these trades with us, as a perk of just being in the Discord. Something that you guys can utilize. We also have a trade competition going, 5K total worth of prizes. Seeing that volatility now, that you guys can still enter for April. Doesn't end until the end of April, so you can sign up until the last week if you guys are interested in that. But yeah, that's pretty much all I got. Like I said, we've seen some more sell side volatility kick in here. Still haven't taken out that liquidity just yet. We can see on the forex side, we did get a run, just taking us just down lower. But I do need to see that liquidity taken on the futures chart. So yeah, that's all I got for you guys tonight. Hopefully we get that run. And yeah, we'll revisit tomorrow. And of course, we'll be running that New York session stream in our Discord as well. But I'll be back on YouTube with you guys tomorrow night. So hope you guys have a great night. Thank you for hopping on with me.